What happens when a stock you own gets acquired? Should you sell it? What happens if you do nothing? Well, congratulations, you own a stock and it was just announced that it's being acquired. Hopefully, you bought it for less than what's being offered, so you make a profit. So, first off, when a company gets acquired, the stock price of the target company, which is the company being acquired, goes up a lot in a day, like say 20 to 30%, much more than usual. It'll look something like this. In Twitter's case, it's going to look something like this. You see the stock pop after it was announced that Elon Musk wanted to buy Twitter. And in the case of Activision Blizzard, when Microsoft announced in early 2022 that they were going to buy out the entire company, it's going to look something like this. So these stocks pop because of what is called a takeover bid premium. When a company wants to acquire another company, it requires the blessing and approval of the owners, investors of the target company. They have to be willing to give up their shares, sell their shares. And to entice them, they can't just offer to buy all the shares of the company at its current market price. Why would investors give up ownership of a stock they currently own? And they own it because they believe it's going to make them money at some point in the future. So, for example, if you own shares of, a stock ABC and it's currently trading at $30 per share, if XYZ company comes out and says, I'm going to buy your shares for the current market price, $30 per share, you're going to tell them to take a hike because you're expecting to get more money from ABC at some point in the future. But if XYZ was like, well, how about I pay you $40 per share today? It's only supposed to be worth $30 today because, well, that's the prevailing market price. But XYZ is like, I'm going to give you a premium today to give up your ownership. Okay, now we're talking. Now you're going to be like, okay, yeah, that sounds like it's a good deal. In most cases, if it's a friendly takeover, the target company would take the deal. So what happens for you as a shareholder? Now, I'm going to use Activision Blizzard as an example. So I own Activision Blizzard. I bought this stock sometime in 2021. And earlier this year in January 2022, Microsoft announced that it was going to buy the stock for $95 in an all-cash deal. So in an all-cash deal, what it means is Microsoft is going to pay me $95 at some point for my stock. At some point, meaning when the deal closes. So a deal is not a deal until it closes. A lot of things can happen in between, which is why the stock doesn't trade up to the offer price. Right now, it's lingering around $79. For example, the deal can be blocked and not approved when it goes to court. This happens if it violates antitrust laws, meaning it makes the industry anti-competitive, like, allowing monopolies to happen. The government can actually block this deal from happening if they feel this erodes competition in any given industry. Now, another thing that could happen is another buyer can come in and make another offer, probably a better offer. They're not going to make a worse offer. So now there's a bidding war. It's going to take even longer to close. That new potential deal has to get approved. The process takes longer. So many things can happen in between just because a deal is announced. So it doesn't mean it's a done deal. When the deal closes, if it's an all-cash deal and you do nothing with your shares, the shares in your trading account will disappear and you will see the cash in your trading account. So if you're not paying attention to your portfolio and one day you open your account and notice that your shares of a company disappeared, just check the cash balance and you'll see that you are paid the cash. It's happened to me before where I wasn't paying attention and had no idea. One of the stocks I owned got acquired, so I went a bit crazy trying to remember whether I sold it or not. I'm like, is my broker gaslighting me here? No, my cash balance went up and I made money on that investment. So check your cash balance if you notice that shares of a particular stock that you were holding disappeared. Maybe it got acquired and you were given cash. So give yourself a high five for a successful stock investment. Now, if it's not an all-cash deal, like if it's an all-share acquisition, you may receive shares of the acquiring company. So if you don't end up selling your stock before the deal closes, you'd end up with new shares of the acquiring company. Again, if you're not paying attention to it, you pop your account open and see shares of a company you never bought, it's because your shares were exchanged for the acquiring company. So in this case, If Microsoft were to buy Activision Blizzard in an all share deal, I would be getting shares of Microsoft. So if you don't end up selling your stock before the deal closes, you'd end up with new shares of the acquiring company. Again, if you're not paying attention to it, you pop your account open and you see shares of a company you've never bought, chances are your shares were exchanged for the acquiring company. Now, you may even get both. Sometimes companies buy companies with a combination of cash and stock. So maybe you'll see a little bit of cash and some stock of a new company that you actually never purchased. So what happens is, in summary, if the deal goes through, you get your cash or shares when the deal closes. If the deal doesn't go through because the government blocked it, well, the shares will probably just trade back down and you'll continue to hold it as if nothing happened. You're holding it for a reason, nothing to do with the underlying, the fundamentals of the company. So you're just going to continue hanging on to it. Another buyer can come in and make an even better offer, but this will prolong the closing process, and that could get shut down if it violates antitrust laws. So what should you do in anticipation of these scenarios? Sell, wait? Well, in my case, I'm going to wait until the deal closes for the full premium to be realized, because right now, Activision Blizzard is trading at $79. There's still a $16 per share in potential returns. It's not trading at $95 because, again, of all the reasons I mentioned, there's a chance this deal may not go through. If it does, great. When the deal closes, I'll get my $95 per share. And if you're wondering, well, isn't this an opportunity to make like $16 per share if I buy it now at $78.95 and the deal closes at $95? Well, yes and no. So what that's called is merger arbitrage. And as we speak, Warren Buffett has been piling into this company because he is chasing the deal and betting on the deal going through. Because if the deal goes through, he's guaranteed to make $16 per share. It's almost riskless. I'm not going to say completely riskless. It's almost riskless because, again, anything can happen. The deal may not close. It may not get approved. Okay, but he's experienced enough to know what sorts of deals get approved and which ones will get shut down. So if I'm feeling bold, I may buy a bit more since there's a potential 20% return I may get from this merger arbitrage transaction. So selling it at this point seems a bit silly considering the amount of money that's potentially being left on the table. In other cases, if you find yourself in a position where one of your stocks got acquired and you were offered shares of the acquiring company, sure, you can just sell your position and take your profits. Just make sure you're selling it at a price where it's close to what's being offered so you get to realize the premium that was offered. So there you have it. You can sell your position, okay? Again, making sure you receive something close to what's being offered, or wait until you receive the cash or new shares if stock was being offered. If you're interested in learning more about stocks and how to pick winners, I invite you to apply for a spot in the Wealth Incubator. It is a 12-month membership container that's going to help you transform your relationship with money and build generational wealth. I'm talking about healing money traumas so you can attract more money in your life, along with step-by-step money and investing strategies that will help you take the aligned action you need to start increasing your wealth. There is a link below, so if you're serious about your wealth, I encourage you to fill out an application form. Also, if you enjoy these types of videos, please hit the like and subscribe button so I know you want more videos like these.